Good morning, everyone, and welcome to today's video. So today I have two pairs on watch, and those are Euro CAD and dollar Swiss. I have just taken pound dollar and euro dollar off of watch because they have sold off. They have played out in my forecasted direction, but not actually given me an entry. That happens a lot in trading. When I was newer to trading, I was thinking about this for a split second a moment ago. When I was newer to trading, that used to cause me a great deal of FOMO. But as I've become more experienced, I'm genuinely not bothered by these moves at all because it happens a lot. Okay, we're trading psychological patterns. Okay, so there's always a trade to be had. You could have placed a trade here. You could have just got short anywhere. You could have got long in this move here anywhere. But that doesn't mean that you're trading within or on the break of what is a clearly identifiable psychological pattern. And all I'm interested in is the psychological patterns because those are what give us an edge over the average trader. Okay, we can anticipate because of these psychological patterns that we look for when price is most likely to do one thing or another. Price can always do one thing or another in any old way, but that's not what gives us a psychological edge. So when I see things now play out in my forecasted direction without giving me an entry, all it does is embolden my confidence that the forecasts that I'm making are actually accurate. Of course, nothing happens all of the time and nothing happens none of the time. And that is one of the things that I tell myself so that I remain probabilistic. But I've rambled on for long enough, so let's break these pairs down for you now. So EuroCAD on the higher time frames, my favorite of the bunch today because it is the clearest, in my opinion, when it comes to these psychological structures, psychological things that we look for. So on the higher time frames, if you've watched my videos, if you've been watching them regularly, you will know that I was looking at this because we had this sharp move down followed by a sharp move up. That usually indicates that the sharpness often indicates how aggressive price will rally or sell off, if on the flip side, from this area if it reaches that area next time around. Of course, the more aggressively price rallies or sells off, then obviously the more lucrative that makes, the more valuable it makes an area such as this, because if price rallies from that area again aggressively next time around, then obviously your trades are more likely to be more profitable. Okay, and it may be a bit easier to manage them. So what happens? We have a sharp move down followed by a sharp move up. Price corrects sideways for a very long period of time. We even have, just to touch on it, we even have this structure here which doesn't quite complete. Okay, and that is one of the reasons this pair is on watch today. So we have this 1, 2, 3 touch structure which near misses to this high, which also has a middle section, a 1, 2, 3 middle section in it like that. And when we see these near misses, so when price comes up to a high area of value such as this and it doesn't quite tag it, that increases the likelihood of price finding its way back up to this area to take out this high, particularly, just to touch on it, when we have two bullish wicks. So when we have two green candles with two green wicks above it, that is more likely that this high will get filled, particularly when we scoop all the way back down. We tap into this area here. We know that on the higher time frames, we typically break below the low before rallying to the upside, and that is what we call mass psychology. We do see that on the lower time frames sometimes, but more so on the higher time frames. This is where we see people caught the wrong side of the market who believe what was previously support becomes resistance once it's broken below. And one of the reasons they think that, particularly on the higher time frames, is because the media get hold of the narrative. I don't necessarily mean like news channels, but broker platforms with their little ticker feeds in the side panel that say things like EuroCAD at, in this instance, 8-year low. When people see this going down and down and down and down and down, that have seen this move, they think it's just going to keep going. Okay, if they have no clue how to trade and they're just trying to get rich quick, or they're just trying to make a little bit of money fast for whatever reason, then they think this is just going to keep going. A lot of them are too zoomed in. I haven't touched on this for a while, but a lot of people do bottom-up analysis rather than top-down analysis. So they will be so zoomed in, they won't know that they're trading into what is a high area of value for a buy. So they think this is just going to keep going. They're not aware that they're trading into a low. And that is one of the reasons that we do top-down analysis as opposed to bottom-up analysis, okay? And the bigger players, as I've talked about previously, the investors, the banks, etc., they see this, if it breaks just below, they see this as a high area of value for a buy. As I've said before, if you're looking to buy a property on a street or in a particular area, if the price on that street for those properties or a particular property drops lower than it has for some time, then logically, from a business perspective, that makes it a bargain area of value for a buy. Okay, and what happens? We break just below and then we rally to the upside aggressively. We then have this impulse correction, potential continuation to the upside. And one of the things that we do, okay, we measure the impulse. So from the base to the top of this correction, if we assume that the continuation leg out of an impulse correction continuation is of a similar length to the impulse which is began the move, that would take us up to this area, which mathematically ties in with us price taking out that high, which is what I was talking about a minute ago. We also tend to see these larger corrections about halfway within a range. So half within a range, I mean from here or here now, here all the way to here. So that makes sense as well. We also have that near miss that I was talking about. So we have the base of this structure here. Price scoops all the way back down and near misses it. We then have this FOMO channel, which I've talked about, where many of the people that saw price reaching their desired area of value here were planning to get long once it got here, but they started buying once they saw it start to move without them. I use without them in quotation marks, but that's a story for another day. It moves up, so they get long, partly out of FOMO, some of them people, and then what happens in the majority of cases, price comes down to take out this near miss, to take out the low which it near missed to. It breaks below because this is once again a higher time frame liquidity point. It breaks just below, stops out all the orders. The bigger players see this as a bargain area of value for a buy, and then they start buying. Okay, and it pushes up. So these patterns that we look for playing out time and time again. If we just drill down now, you can see that we have this. I didn't manage to get an entry here, but we had this 1, 2, 3 wave move to the upside. Okay, we tapped into this area by way of a 1, 2, 3. So that is a completed piece of structure. We even have a middle section within that, a 1, 2, 3 middle section within that. So that is a completed piece of structure. We then have, there is to some degree, you would see this more clearly on the 1 hour chart. You would see a 1, 2, 3 middle section. Price comes back down. Doesn't quite take out the lows down there, but it takes out this low and then rallies to the upside. So that is a completed piece of structure. Whoops. And then you can see, what do we have here? Okay, we have the same psychology repeating itself over and over again. Okay, so we have, you can see we broke below this low, pushed up, we push down again, push up, and then we have some structure forming. Okay. And what we have here is we have this low, price scoops all the way back down, near misses it, pushes up, and then comes back down. This is the FOMO channel again. If you just look at this, we have a 1, 2, 3 touch middle section, okay, within this larger structure, which I forecasted last night when I did my forecast would likely come all the way back down to here, take out this low, and then push to the upside. And then we would have that 1, 2, 3, the 3 drives that we look for: first drive, second drive, third drive, and typically speaking, it's the third drive that goes. Okay, and then we have that middle section, that 1, 2, 3 middle section within that. If we just measure the impulses within this middle section, they're usually of a similar length to each other if we just ignore the wick there. So that is a completed move as well. So all of this makes sense to me. So with that in mind, what I'll be looking for today from this pair, this is a very, very clear structure. I do like this pair a lot, but it's not about what we like. It's about what are the entries, ones that are going to give us a profitable edge. So what I'll be looking for in this instance, because we do have that little hook point sat below, one of the things that I do is I measure the range. So the range of this correction that price is trading within. If there is a little sharp hook point, particularly one which price rallied from aggressively last time around, if there is one sat just below the low of the structure, then I don't tend to wait to call the bottoms. In this instance, we don't kind of have what if this touch here was here, so level with this one here. So if we had kind of like this, let me see if I can make this a bit clearer. But if we had kind of paintbrush tool doing what it usually does. If we had like a second bottom which was level with that and then we came back down, this is typically where you would consider a risk entry, where you look to call the bottoms. However, I personally won't place a risk entry at the bottom of a structure like that if we have a hook point sat just beneath, which happens to be less than 50% of the range of the structure that price is trading within away. So by that I mean, you can see here I've just measured the structure of the range that price is trading within, and you can see if I just take that down to here that this hook point is less than 50% of this range away. So that is why I wouldn't take a risk entry from the bottom of this structure here. Okay, if this hook point was further away, so let's say the hook, like if it was just this hook point here, then I would consider a risk entry within this range, because this hook point would be too far away. Okay, it would be almost about 80% of this range away. Hopefully that makes sense. But with all that in mind, what I'll be looking for today is for price to tap into this area, followed by a push up and a flag, and then I would look to get long on the break of the flag or within it, and then I would be able to manage it up to these highs for something in the region of 4 to 5%. And if we just take this, one thing I just noticed, and I obviously paid attention to when I was doing my forecast last night, is if we have this impulse correction continuation, okay, if we just measure that from there to there, that lines up perfectly. So impulse correction continuation within this impulse correction potential continuation, and then within that we have that impulse correction continuation middle section. So the patterns that we look for are fractal, and when they start to show their hand, it becomes a lot easier for us to anticipate what price might do. So that is Euro CAD. That's what I'm going to be looking for today. I can cancel that alert there. I've just noticed that there's an alert there. That's not relevant anymore. That's an old alert. Okay, that's not deleting for some reason. I don't know what's going on with TradingView this morning. Let's try that again. I think I did try to delete this before the video. Okay, it's not deleting. TradingView obviously doesn't want me to delete that alert for whatever reason. So I'm just going to let that one trigger. If that alert does not trigger today, that one there, no trade for me. So last up is dollar Swiss. Dollar Swiss, slightly lower down on my list, just really because of the sequence, how prices move down. We're always analyzing the nature of price as opposed to not just what price is doing, but how price has done it. And I shall touch on that in a minute. So on this one, we do actually have, so on the higher time frames, we have, if I just zoom out to the weekly, you can see that we do have some near misses up here. Okay, that is a slight negative confidence factor, but we are so far down from that, and so much closer to this near miss, to this low here, that I'm not too bothered about what's happening up here, particularly. So this is just a potential range play from here to the bottom of here. You can see here that the bigger players obviously stepped in at this area of value. And where do you think they're likely to be getting out? They're likely to be getting out at least here, and potentially price could move lower to take out this near miss to here and take out this low here. But as a first target, I'm looking for a move, a range play, just literally just from this high, we broke above, caught people the wrong side of the market, pushed back in, just looking for a range play down to here. And there's no reason for price to take out these near misses until it has at least taken out this low, okay? As we drill down, things start to get a bit clearer. We have this hook point here, which caused a bit of a sell-off last time around. We have this 1, 2, 3, which just so happens to line up with it. And within that, so we have an expanding pattern. So when we have a pattern where we have lower lows and equal or higher highs, this is what we call an expanding pattern. Essentially, volume is coming into the market. And then within that, we have this middle section. So a 1, 2, 3 middle section within this 1, 2, 3, giving me a clue that is a completed piece of structure. And of course, we did sell off from that area. We have this, notice we tapped into it. What have I said about higher time frame liquidity points or areas of value? Typically speaking, we break above them. So what happens? We tap into the area, but we don't break above it. So that would indicate that there are potentially still orders above here which need to be filled before price can move to the downside. And it's no surprise to me, therefore, that we scoot back down, scoot back up, broke the high, and then pushed to the downside because there were still orders up there that needed to be filled. As I drill down, you can see, as I've said, one of the reasons that this is lower on list is because this is not your natural sequence so much. Typically speaking, we see these tight flags into more tight flags, and then the flags tend to get larger as we go down. But in this instance, what we've seen is we've got that kind of scooping nature, which I've talked about, where price comes down. We get these kind of tight flags, and then price scoops back up, drops, scoops back up, drops. So price is always repeating itself. So if it's moving in that kind of scooping nature, there's a chance it's these particularly risk entries where we look to call the top of the piece of structure, they become more risky because price can just tag you in, tag you out, scoop back up, and then drop. Okay, so we're looking for repetitive patterns that we can, capitalize from over and over again. So what do I see here? I see two possibilities because of that scooping nature. We may have what we call an M-style pattern. Okay, so by M-style pattern, what I mean is that we get this kind of, let's try that again. Right, there we go. An M-style pattern where we get something like this, okay? Or a W-style pattern, whatever you want to call it. We may get something like that. I'm not too worried about the first touch of this structure because it's a bit subjective, but just trying to analyze the overall pattern. So we have, what do we have here? We have that 1, 2, 3. We have a 1, 2, 3 middle section within all of that, a 1, 2, 3 completed middle section within all of that. And then if we just measure this move up here, what's happened there? Right, let's try that again. Oh, I've got the wrong tool on. Right, okay. So if I'm measuring this move here. Okay, if we measure the move out of it and assume it's of a similar length, that takes us to where price actually is now. So price could potentially reverse from this area. If we were to move, take that from the break of this correction, that would take us up to this area. So with all that in mind, what I'll be looking for today from these pairs, I have 3 minutes of this video left. Two possible entries, okay? These M-style patterns, we can see that price did sell off aggressively from here last time around, but it also sold off aggressively from here. So my preferred option would be that kind of M-style pattern where we tap into this area of value, and that wouldn't surprise me if you just look at how price has been moving, that scooping nature. It wouldn't surprise me if we tap into this area of value, and if we do, I'll be looking for the push down followed by the flag, and then I would look to get short either on the break of the flag or within it, and that would be my preferred entry. We could, because we've kind of done enough, as I say, if we take this as the impulse correction continuation, this is massively overextended in terms of this initial impulse. Okay, and as I said, if we take this move here, we've done enough to fulfill that move as well. Okay, so price could reverse from here as well. So if it does, once again, I'll be looking for the push down and a flag. If we literally just push down from here and we do so aggressively, this little tight consolidation could act as the left shoulder of a potential head and shoulders pattern, a mini head and shoulders pattern. So paintbrush tool, not playing ball again. There we go. We could get something that just lines up next to, which is symmetrical to that little consolidation to the left. We often see that, and that's why you get these kind of head and shoulders patterns. And so if we get that just to push down from here followed by a flag, then I would look to get short on the break of the flag or within it, and I'll be able to manage this down to these lows very, very easily. Okay, so I've got two alerts in this instance. I have an alert set just below this area of value to see if we can push up to there, and I also have an alert set just below this area of value to see if we can push below. I was thinking of trying to cancel this alert here, but as you've seen from EuroCAD, for some reason TradingView is not letting me cancel my alerts. Who knows why? But that is what I'm going to be looking for today from today's pairs. I hope you've enjoyed this video. I hope it's perhaps changed the way that you look at the market in some way, and or cause you to think about how you currently look at the market. And I will see you again in tomorrow's video, which will be Friday, providing I have a pair or pairs on watch, or if I have placed a trade, I will recap that for you. Thanks for watching, folks. I'll speak to you again soon, and I hope you have a great day.